Okay, so buying a home is often seen as a major life milestone for people, but one of the biggest hurdles that most people face is coming up with a large deposit that is often required. Saving for a deposit can take years, and the higher the deposit, you find the better mortgage rate, so it's an advantage to have a larger deposit if possible. However, there are a variety of low deposit mortgage schemes designed to help first-time buyers in particular, and others access the property ladder with just a smaller upfront payment. In this video, we'll explore some of the most popular low deposit schemes available and help you determine which one might be right for you. So, a low deposit mortgage allows you to borrow a higher percentage of the property's value, meaning you don't need to save as much for the deposit compared to a traditional mortgage. While standard mortgages typically require a deposit of 10 or maybe 20%, low deposit mortgages can require as little as 5%. There are schemes specifically available for first-time buyers who may not have accumulated enough savings for a large deposit, but they're also available to others looking to buy their next home. There's also several government-backed and private mortgage schemes that can help you purchase a home with a smaller deposit, and here are some of the key ones available. So the first is the 95% Mortgage Guarantee Scheme. It was launched in 2021 and was designed to help buyers with small deposit access mortgages. This government-backed scheme enables lenders to offer mortgages with a 5% deposit, while the government guarantees a portion of the loan for the lender to reduce the risk on their part. The key features that you only need a 5% deposit. It's available for both first-time buyers and existing homeowners, and can be used for both new build and existing properties. A second scheme to consider is a shared ownership. The shared ownership scheme allows you to purchase a share of a property, which is typically between 25 to 75% of the property value, with the option to buy more shares over time until you eventually own 100%. The remaining percentage that you don't own is owned by a housing association, and you'll pay rent to them on that portion. The deposit requirement for a shared ownership is usually much lower because you're only buying a share of the property and not the full value. So the key features of this scheme are that you can purchase a share of the property between 25 and 75%. The deposit is based on the share you purchase rather than the actual property value, meaning it's usually much smaller, but rent is paid on the portion of the property you don't own. You can increase your share of the property over time, and this is known as staircasing. This scheme is available for first-time buyers and those who meet the income eligibility criteria, and can be particularly useful in expensive areas where full home ownership may be out of reach. The third scheme I wanted to talk about was the First Home Scheme. It's a new initiative launched by the UK government aimed at helping first-time buyers get onto the property ladder. This scheme offers a discount of at least 30% off the market value of a new build home. The scheme is available in specific areas, and the discounted price remains in place when the property is sold to another eligible first-time buyer. The key features are that you get at least a 30% discount off the property market value. The discounted price applies to homes on sale in designated areas only, but the discount is passed on to future buyers, ensuring the property remains affordable. You will need a minimum of 5% deposit of the discounted price. This scheme can be an excellent option for first-time buyers, particularly in areas where property prices are higher than the national average, although the availability of the scheme is quite limited. And fourthly, I want to talk about some lender schemes. So some lenders have come up with their own schemes to aid borrowers with small deposits. And speaking with a whole-of-market broker will help you understand which schemes you may be eligible for. As some examples, Skipton Building Society offer a track record mortgage where your history renting can be taken into account to borrow without any deposit. Accord Building Society have created a mortgage product that allows you to purchase for up to £500,000 with only a £5,000 deposit. And Barclays offer you a mortgage where your family can put money into a savings account, allowing you to purchase with no deposit. Each scheme, though, has their own criteria and determining who may be eligible for it. So in conclusion, low deposit mortgage schemes are a lifeline for many people looking to buy their first home or move up the property ladder without waiting years to save a larger deposit. By understanding the options available, you can make an informed decision about which route is best for you. If you're ready to start your journey, take time to explore your options, check what eligibility requirements are, and seek advice from a mortgage broker to ensure that you're making the right choice for your future.